Hi, Derek. I have a great question for you this morning. Should you pay off your mortgage before you retire? A lot of us want to go into retirement debt free, but it's not just a financial, but you were also saying it's a very emotional decision.
It definitely is, Aaron. There's every individual is completely different. There are many people that are very comfortable with utilizing debt as a tool, and there are other people that cannot wait for that moment to be debt free and not have that over their head. So
Right.
definitely individualized.
I can understand that sounds really attractive, but let's walk through what you should consider if you are thinking about paying off your mortgage. And the
Mhm.
first one is rather straightforward, simple, your mortgage rate.
Yeah, mortgage rates certainly have changed since we've experienced over the last 2 months, or actually a little bit longer than the last 2 years. We've seen interest rates on mortgages certainly escalate. In
Mhm.
the past, we were seeing in the low twos, high twos. You see here today a 30-year fixed at nearly almost 7%. So
Ouch.
if we have a person going into retirement and they're going to be taking on a new mortgage, or the debate is about paying off an old mortgage, those are two completely separate conversations right now, which it wasn't the case in the past.
Right.
Mhm.
Next consideration, of course, the tax consequences of either paying off your mortgage or using money from your retirement accounts to pay off your mortgage.
Yeah, two separate sides of that. The first was in the past, a lot of people really enjoyed claiming their mortgage interest on their tax filings and
Right.
taking that deduction. But today, with where the standard deduction is, that opportunity does not as prevalent as it was. So that certainly needs to be understood. Of, are you getting any benefit on the interest rate that you're paying off from the mortgage? And then tapping into retirement accounts. Aaron, I am sure there's no one really interested in taking a $300,000 or $400,000 distribution from their retirement accounts to pay off a mortgage and paying the tax bill that comes with that of, I don't know, 38 or 41%. So there are a lot of kind of nuances that go into that decision, but taxes certainly need to be part of it.
Yes, absolutely.
Mhm.
Next, of course, as interest rates climb, that will make paying down certain debt more expensive. So, how do we prioritize paying down that debt?
This is a big one. If this conversation isn't already happening in your friend circles, it should be already. I'm having it with clients, and we've been. With the interest rate moves, those certainly make a big impact on your carrying debt and your
Mhm.
carrying cost on that debt. So, revolving debt like credit cards that
Right.
are already normally at very high interest rates in today's environment are even higher. So, getting those revolving debt and credit cards off the books is a super priority for clients and individual households. The next is really to look at what other debt loads that affect your monthly cash flows, like car payments, to see what type of interest rates you have on those. I'm sure we'll touch upon HELOCs and some other debts, but really sitting down and evaluating where your highest interest rates are and what is eating up your income
Right.
certainly need to be
Right.
addressed in this environment.
So, with those home equity line of credit, the HELOC, that's
Mhm.
generally in the bad debt column, right?
Right now, it's in a really uncomfortable debt column.
Right.
HELOCs, which are traditionally tied to bank lending rates, those can fluctuate almost every month. So if you look at where a HELOC was, maybe you were borrowing at an interest rate of 2.25 a few years ago. Those HELOCs now are going to be somewhere at prime plus two. So those can change every month, and those can just really get uncomfortable fast of eating up your income, your savings, and definitely need to be addressed.
Right.
Mhm.
And last, of course, let's say that we've paid down that high interest debt. Then do you prioritize paying off your mortgage or are we prioritizing other savings instead?
Uh, that's kind of Pandora's box here. That's a
Okay.
little bit of a rabbit hole to go down. So
Let's do it though.
one of the things that I've found is, as clients are getting set for retirement, if most of them have prioritized retirement savings strongly. So we've got a
Right.
lot of money in 401ks and IRAs, but many of them are missing the boat of bank savings and building up liquidity. So that's really going to be an important point for a lot of people going into or near retirement, is build up your bank savings or your lubrication for liquidity. So build up bank savings, reduce and eliminate all that revolving or secondary debt. And then it's really just a conversation about looking at income versus expenses, and with the mortgage in, with the mortgage out, what resources you have to pay that mortgage off. There's just a lot that goes into it.
Mhm. And remember that even when you pay off that mortgage debt, you're still going to be having other housing bills.
Carrying costs,
Carrying
always a good conversation to
Mhm.
have. So a lot of folks will think, well, if I get this mortgage off the books, boy, I have no expenses. But they tend to overlook the fact that right now in their mortgage payment, there's property taxes, there's homeowners association, depending on the neighborhood you live. There's carrying costs for insurance, your homeowner's insurance. So a lot of people actually get a little shocked when they actually do make a decision to pay off the mortgage if they didn't do the planning and realize that they still might have a five or $1,000 a month payment that's
Right.
due towards the carrying cost of that home. So I think just sitting down and evaluating where you're at in your process, what you're carrying in debt, and what makes the most sense. And the last part that we touched upon in the beginning is, where do you stand personally on
Right.
making sure that you're sleeping well at night?
Certainly no cookie cutter answer here. I
No.
appreciate talking through the math though with you, Derek. If somebody does want to have that conversation with you, what's the best way to reach you?
Yeah, they can reach out just directly to the office, 703-273-2326. They can also find us at 3leaffinancial.com on the web.
All right, Derek, thank you.
Thank you, Aaron. Have a great day.